Time now for business news. European markets were marginally lower today, with shares in Germany off the most. This is at the end of a choppy week of uncertain global sentiment. Asia-Pacific markets are trading mixed after the S&P 500 hit a new high for 2023, and the Dow Jones Industrial Average saw a third straight day of gains. Yesterday, the U.S. large-cap index closed with a needed 20% gain from a recent low in order to end the bull market classification. Officially, the S&P 500 is up 20.04% since October 12, 2022. A key focus for next week would be the U.S. Federal Reserve's policy meeting on June 13 and 14, especially after latest jobless claims increased more than expected to their highest since October 2021. Arise business analyst Bode Ososami is here to take us through the markets as the New York Stock Exchange opens for cash trading. Bode, thanks so much for joining us on Newsday. Now, what are your thoughts on U.S. markets? Can the markets keep on climbing, as seems to be the case?
Just want to preview what European markets are like. FTSE 100 is down 0.56. DAX is also down 0.12%. CAC 40 is also down 0.24%. Asian markets were on the front foot, I would say. Shanghai Composite closed up 0.55%. Hang Seng closed up 0.47%, while the Japanese Nikkei also closed up 1.97. Looking at U.S. markets, it's looking pretty mixed. That's the picture I see as the New York Stock Exchange just opened. And you can see that NASDAQ is up 0.56%. Dow is down minus 0.11%, while the S&P 500 has been climbing almost unstoppably, continues to inch up 0.24%. It's a bit quiet on the data front, but the other developments, notably Tesla and General Motors, both car maker stocks were climbing in pre-markets after GM announced plans to utilize Tesla's electric vehicle charging network and said its vehicles will also use Tesla's North American charging standard port in its cars starting in 2025. Tesla is up 5.71%. General Motors up 6.0%. Can the market keep climbing, like you say? There are analysts who say no, some say yes. But those who say no, they say so because the S&P gains have been carried by just 7 or so technology companies, and it will be relatively easy for downturns in the context to drag those few names down, which will undermine the advance. So it's not a broad-based rally. Secondly, the view was that the Federal Reserve would deliver interest rate cuts by the end of the year, and many have still priced in that perspective. It now looks quite different. Even if we do get a pause next week, that is more likely to be followed by a hike, given that inflation is still hot. And of course, with inflation still high and the labor market still too tight for the Fed to consider easing, further hikes imply that the stocks, if you see any uptick in stocks, it's likely to be very modest at best. But there are others who say stocks can still climb up further. They are arguing that S&P gains, yes, there are a few stocks that leave that are responsible for those gains, but that leaves plenty of room for the rest of the index to catch up. And the bulls also argue that the impact of price hikes have already been priced into stocks, and the inflation data on Tuesday may also affect the chances of maybe a longer pause. So if we do see material softening in prices, the pause could be extended for longer than something, which of course is bullish for markets. Many also say the recession scare has been oversold, and it looks like the economy has managed to fend off a recession for much longer than many had imagined, despite the worst inflation and most aggressive rate hikes in 40 years. And traders are now more confident to buy as this recession risk fades. So there are mixed feelings, if you like, on whether this can still climb further. But NASDAQ, as we speak, is up 0.57, S&P 500 up 0.23, Dow 30 is down 0.07%.
Well, thanks for that, Bode. And stick around with us while we take some other business stories and come back to you. The UBS and the Swiss government announced today that they had signed a loss protection agreement, which will come into effect once the takeover of Credit Suisse is completed. The provisions will see the Swiss government cover losses of up to $10 billion following UBS's acquisition of its former rival.
Consumer price index inflation remained close to zero in China in May, in a further sign of sluggish demand across the world's second-largest economy. CPI inflation was 0.2% last month compared to a two-year low of 0.1% in April, according to official data. China's low inflation environment contrasts with other major economies and has persisted months after authorities removed COVID restrictions that for 3 years weighed on economic activity. Producer prices, which measure the price of raw materials and goods live in factories, fell 4.6%.
Economic growth in India is expected to outpace that of China this year and next, according to the Organization for Economic Cooperation and Development's latest Global Economic Outlook report. The OECD predicted India, China, and Indonesia would all top gross domestic product projections for 2023 and 2024. Overall, the organization expects global growth of 2.7% this year, which marks the second lowest annual rate since the global finance crisis, except for the 2020 COVID pandemic year.
UK Prime Minister Rishi Sunak leaves Washington after a two-day visit armed with President Joe Biden's backing for his efforts on artificial intelligence and agreements for closer economic cooperation to shore up green industries and supply chains. The two leaders agreed to start work on an accord that could ultimately give British-based manufacturers access to the massive package of U.S. subsidies and tax breaks enshrined in Biden's signature Inflation Reduction Act.
Turkish President Erdogan has named Hafiz Gaye Erkan as the new central bank governor, replacing Sahap Kacivoglu in a move that may signal a return to a more orthodox monetary policy. Now, the announcement comes with a makeover of Erdogan's top economic team after Mehmet Şimşek was appointed as Treasury and Finance Minister. Erkan, a former banking executive in the U.S., is a Turkish Monetary Authority's first female chief.
Taiwan-based computer manufacturer Acer supplied at least $70.4 million worth of computer hardware to Russia between April 8, 2022 and March 31, 2023, according to customs data seen by Reuters, after saying it will suspend its business there. While not illegal, Acer's actions contrast with those of key Western rivals such as Dell and HP, which ceased shipments in February and April 2022, respectively, following Moscow's full-scale invasion of Ukraine.
Crypto exchange Binance in the U.S. said yesterday that it's suspending U.S. dollar deposits and that its banking partners are prepared to pause fiat dollar withdrawal channels as early as June 13th, just days after the U.S. regulators sued Binance and its CEO, Changpeng Zhao. The U.S. arm of the world's largest cryptocurrency exchange said in a tweet that the move comes as it is taking proactive steps in its transition to a crypto-only exchange. However, trading, deposits, and withdrawals in crypto would remain fully operational, the exchange said in a notice to its customers.
Moody's has changed its outlook on Coinbase from stable to negative after the U.S. securities regulator took aim at the crypto exchange with a lawsuit this week. The rating agency said its decision followed a complaint filed against Coinbase on Tuesday by the Securities and Exchange Commission that alleges the company violated U.S. security law by failing to register as a broker, National Securities Exchange, or clearing agency.
Well, Tesla and General Motors have struck a deal to let the Detroit car maker's customers plug in at 12,000 of the Texas company's roadside chargers. GM drivers will be able to use Tesla's fast charging stations early next year in an arrangement similar to that announced by Ford and Tesla last month. GM Chief Executive Mary Barra described it as an important next step in expanding access to equipment that can recharge an electric vehicle in under 30 minutes.
The UK's windfall tax on oil and gas producers is set to be scaled back as part of efforts to boost investment in the North Sea. The Chancellor, Jeremy Hunt, today presented plans to introduce a floor on the 35% levy in the coming days so that it can only apply if oil and gas prices trade above a certain level. The move comes after months of lobbying from the sector and as Norway's state oil company Equinor considers whether to go ahead with its major new North Sea project, Rosebank. Well, for more on this story, let's cross to London, where we're joined by Rise business analyst Bode Ososami. Bode, what are your thoughts on the impact of a new central bank governor in Turkey?
Well, markets are hopeful that the appointment of this finance executive, Hafiz Gay, alongside the new economy minister, Mehmet Simsek, means, given the background that she has in U.S. banking sector, training at Princeton, that we will have a much more orthodox or conventional approach to monetary policy after years of this ultra-low borrowing costs amid soaring inflation. Inflation is 39% in Turkey, one of indeed the highest amongst OECD countries. Erkan would be Turkey's first female central bank chief. She was a former managing director at Goldman Sachs and co-CEO at First Republic Bank, and she will be Turkey's fifth central bank governor in 4 years. She has no formal monetary policy experience, and the Turkish lira continues to plunge, given the state banks pulling back from propping up the struggling currency amid record high inflation. Over the weekend, President Erdogan appointed former economy chief Simsek as the new treasury and economy minister. He is also known for market-friendly policies, so we certainly have a team that looks very market-friendly, but they will be judged on monetary policy moves, inflation, and the lira. You recall Erkan's predecessor, the former central bank chief Sahap Kavkioglu. He was named head of the Banking Regulation and Supervision Agency. And under his tenure, President Erdogan was able to make frequent interest rate cuts from around 19% to the present 8.5%. You also recall that Erdogan had fired Kavkioglu's predecessor, Nasi Akbal, in March 2021, only 2 days after the central bank raised interest rate. So this is not an easy job to do, and we'll have to wait and see, especially to what extent the autonomy of the central bank continues to be compromised, and to what extent the monetary policy approach changes.
And this loss protection agreement, what else do we know about it involving UBS?
Well, the UBS Credit Suisse marriage is certainly not an easy merger to swing. On Wednesday, UBS confirmed that it would push back its Q2 results from July 25 to August 31, given they need more time to sort out the mess. The rescue of Credit Suisse is said to be the most complicated merger since the financial crisis, and the size of the government support is huge. We understand it includes over $100 billion liquidity line, and apart from potential for major job cuts, branch closures, all of which have led to a lot of criticism domestically. And with the federal elections due in October, the political environment is certainly going to be a bit hostile towards this. A poll that was published shortly after the deal was announced showed that 75% of voters wanted the merger undone and the mega bank split up. The loss protection agreement is, they say, likely to be the final hurdle for UBS to cross before completing the takeover soon. And in talks with Swiss authorities, they were able to get as much as $10 billion, the government to contribute as much as $10 billion to cover losses the bank would make in winding down unwanted assets. And the government's assistance will kick in after UBS covered the first $5.5 billion of losses. And this covers the $49 billion portfolio of Credit Suisse assets that UBS plans to wind down, about 3% of the combined group's total assets As part of the agreement, UBS will pay $44 million to the Swiss government for setting up the guarantee and $40 million annual maintenance fee. So UBS is saying they're going to be very prudent, they're going to be very diligent, they will minimize the losses, and they will try and maximize value realization, but they need this protection just in case things don't work out as planned. Also, Swiss parliamentarians yesterday voted to empower a special parliamentary commission of inquiry into the downfall of Credit Suisse, and they're going to call president and former senior executives from both UBS and Credit Suisse to give sworn public testimony. That will be interesting to watch. They will also hear frustrations expressed by upset Credit Suisse bondholders wiped out by the deal. And of course, we know that there are still a lot of legal action that are in very early stages. So, as they say, we have to watch this space for more developments.
Well, but the UK did not get the trade deal that it wanted. To what extent is this a disappointment for Sunak?
Well, it must be, even though Sunak has said that the environment has changed, and I think I agree. We are the environment now is very different from what it was many years ago when the UK exited the EU. Globalization is now in a state of flux. Countries are reimagining how they want to trade and on what terms. And more importantly, the shift towards protectionism has been accelerated by so many domestic challenges: weak growth, dependence on strategic materials, and vulnerability, fear of being vulnerable to Asia, China. Biden also obviously favors Europe and Japan over the UK, and some of that is because the UK is a smaller economy. But the recent trade declaration gives UK electric car firms access to US green funding as part of plans to boost UK and US ties announced by Rishi Sunak and Joe Biden. The so-called declaration will strengthen economic ties, but the bottom line is, apart from this defense industry ties, data protection deal, it steps up cooperation on artificial intelligence and eases some of the trade barriers. But the companies that really were leaving the UK to go to the US because of this Inflation Reduction Act freebies or incentives will, of course, maybe be thinking twice, because the UK companies will also qualify to benefit from those incentives. So it's, I think it's a continuous type of situation. The US definitely is monetizing its fiscal space to be able to have an edge over many other countries that don't have the same space. And many of these countries, the EU, Japan, have had to go with the begging bowl to be admitted, to be given special concessions under this new IRA. But it's better than nothing. But I'm sure you know the opposition are going to say this is not what was promised.
Well, very briefly, as we've almost run out of time, that inflation data in China, it's still quite low. I'm wondering why is it the accelerating deflation? Is it a welcome development?
Well, PPI, that's Pulitzer surprise inflation, fell for the 8th consecutive month to minus 4.6%. That was the fastest decline since February 2016. And of course, PPI is a predictive indicator of consumer inflation, which rose by a mega 0.2% year on year, up from a 0.1% rise in April. The thing about inflation is that it shouldn't be too small and shouldn't be too large. You have to find the right balance, because when inflation is very, very low, it's a sign of economic concerns, a sign that, of course, there is lower demand, and for manufacturing, consumption appetite is dropping. So it's a sign of challenges in the economy. And the other thing, of course, especially where debt is high, it makes it difficult for borrowers to pass on some of their costs to their customers, which gives a very difficult position for them. But the bottom line is this should encourage the government to stimulate the economy further, given that inflation is low.
Definitely, Bode. So sorry to interrupt you. We're out of time. Thanks so much for joining us on Newsday.